Trend lines are one of my favorite strategies because you don't have to question when should I get in. You don't have to wonder, is this my setup? It's easy to identify. Now there are some situations where it can be difficult, but I'm going to explain how to eliminate those. And I'm going to show you a trade that I took today on Amazon because of a beautiful trend line crack that is obvious to the eye on the daily, on the intraday, and the small picture. Let me get into that right now. If you're liking this type of content, by the way, make sure to like and subscribe and share with another trader because we greatly appreciate it. So Amazon, as you can see here, this is a daily chart. There's a nice little trend line formation right here on the daily, and you can easily see that. And I always like to draw my horizontal lines of support and resistance. As you can see, there's some resistance right above here, and we also have some support right in this area. And the reason I do that is because I want to find out where are the key levels, because I like to play off of these key levels. Now, if we zoom in on the 30-minute, those levels come into play. As you can see, I'll adjust them a little bit just so that way they fit the chart. And with that being said, though, this is my price target, 136.20. It did not get there today. The market was a little slow, a little choppy today, but in some cases, it will get to your target. But either way, it ended up being a great trade. And let me show you this. You can see here on the 30-minute that there's a beautiful trend. We have multiple touches. This is what I mean by easy to identify. What I don't want to see is a trend line that only has 1 or 2 touches. I want at least 3 touches. And I don't want it to just be hugging the trend line unless it's been hugging the trend line for an extended period of time with massive volume. Those are the slim and few occasions that I will take those. But for the most part, if it's just been holding a trend line and never actually bounced off of it and retested it and held it, then I'm not really going to play it. But if it tests it, bounces, test again. As you can see here, we test, we bounce, we test again, we bounce, we test again, we bounce, we test again. That's what I want to see, because now we're trending, and if we break this trend line, then it's easy to see that we are now reversing trend. And with that being said, I'm always going to identify the next key area of resistance as my risk. I want to take this time to say thank you to our sponsor, Cobra Trading. Cobra Trading is the go-to broker for day traders and short sellers. And I'm not the only one saying this. In fact, Benzinga awarded Cobra Trading as the go-to broker for short selling. They have a heavy focus on direct market access order routing, so you have the fastest execution. They have some of the best locate prices and availability. They also have amazing customer service. I've experienced many different brokers, and it's why I use them every single day and why I'm proud to have them as our sponsor. Sign up now by clicking the Be the Trader referral link below and earn 1 free month of software with Cobra and 25% off all commissions. Now let's get back to the show. So just look on the 30-minute here. When we zoom in right here, this trend line, when it cracks, if you're not sure, you always want to take the wider area. At least for me, that's what I like to do. I like to take the wider area until I'm certain. However, there is still room for improvement on this trade that I am identifying while I'm reviewing this today, because I want to get better as well. I'm always looking to get better. And you can see based off of this trade, if we go ahead, I'm going to go ahead and delete this trend line here. And we're going to go ahead and go to maybe like a 2-minute, and then we'll go to the 5-minute real quick, and then we'll zoom out. And you'll notice that this trend line here is cracking in the pre-market, right? Not only are we cracking in the pre-market, but we also have a support level right around here that formed in the pre-market, and we'll adjust it to this key support that held the prior day. So we start to consolidate and we're holding here. So we're going to go ahead and zoom in, and I'm going to explain why I took the trade the way I did, what I could have done to improve on it, because there's definitely room for improvement. So on this crack here, if we go zoom in a little bit on the 5-minute, I typically do not like to play setups that don't give me a nice push after cracking, or that when they do crack, I want to make sure that we have a real bounce, and I don't like to chase, because if it just looks like it's just dying, then I need to risk an area that I know for a fact that if it breaks, that I'm wrong. And in this case, when it happened, I thought the best area to risk was this 142 previous red green. I thought if it got green on the day, I would be wrong. and the trend line crack would no longer be valid. In hindsight, I am now seeing that when we cracked this area, not only did we crack, but when we pushed back up, we wicked 3 times on the 5 minute, having a triple top at this key area in the 140.90s, as you can see right here. And then if we zoom out a little more, it's also the key support over here. When we wick out in that area, that should tell me that, you know what, you might want to risk this previous high, which would have gave me a better risk reward and made the day a whole lot better. But hey, I can't complain. I still like how I traded it with the information that I had, with the way I was thinking at the time. The reason I didn't take it on this crack, as I mentioned, is because I thought it should bounce higher before it cracks. I thought we were gonna have some type of bounce, and I was really looking for an entry near the green-red area. What I didn't want to see is at the open, this thing just gapped down. We kind of consolidated, but downtrended, a little quick pop and died. Like, I want to see a real bounce, right? And today the market didn't do that. Like, the market was just selling off. And when the market is selling off, that's something for me to consider, that sometimes I might want to take the trade. However, I don't like taking a trade just because the market's selling off and this stock is breaking down, because there's been a lot of situations where the market will sell off at the open and then recover, and then this stock would have bounced to the green red and I would have had a sweet entry up in this area. So hindsight is always 20/20. I like how I traded this. At the same time though, what is really significant, and let me delete these, because if I don't delete these lines when I zoom in, you'll notice, just make note that this 140.32 is right where the trend line is cracking, right? Remember that. And we'll bring it down a little bit because it really cracked right here. So because of that, because you'll notice when I zoom in here on the 1 minute, the line gets all jacked up. So right when it cracks, we're gonna go ahead and zoom in on the 1 minute. I didn't want to chase. I thought it would have been a chase and I had to risk wide. In this case, it would have been about $1 share risk, but then ideally I wanted it to bounce. I thought we could get a bounce after the crack and short in these areas. I was being a little too picky. So I let it go without me, and it never did bounce for me. It actually had a little baby bounce here, but it wasn't enough for me, because at that point I would have had to risk high a day at 141, and I thought risk reward wouldn't be that great, because I would have to assume that we are going to go to 136. And in this case, when something bounces, I typically want to assume that this previous support that it bounced from is going to hold, because I don't want to assume that it's going to crack and just melt all the way down to my price target. If it double bottom and then we're bouncing, there's a good reason why I double bottom there. There's buyers down there. So I need to position my trade to account for that. So when we first bounce here, I don't think a short in the 139.69 area is going to work if I got to risk 141s or even 140s, because the next area where I got to take profits is 139. So that's 60 cents away, and I already got to risk over $1.50 if I'm going to take this trade. So that's just something I'm not willing to do. Some traders, they are willing to do that. It's just not for me. However, once we get the crack of low a day, and then we consolidate under and push back up to this area of importance, as we mentioned earlier, because it acted as resistance, and then we cracked low of day. Because that happened and we pop back up at this moment, I'm willing to take a trade. And I only took a small position, okay? I divided this trade into 4 bullets. I learned this from a good friend of mine named Scott, who's been on the show before, so make sure to check him out. And so I put 1 bullet right away, risking wide. Now, why did I risk wide? Because I wasn't sure. That's why. I wasn't sure. If I'm not comfortable, I'm not sure where the risk is going to be, but I know I want to be in this play because it is my setup. I'm going to take a wide risk. However, once we held, if we go and zoom in here, I first took a bullet here, but once we held and we try to pop back over and we wicked, I went full size. And the reason I did that is because now I have some signs that I should be in this play. And once we get a pull, I cover a small portion, because I'm really holding for the move. Now, I didn't get the move, as you can see earlier, but we're going to go ahead and zoom out, and I'm going to explain what I did with my risk. We're going to go ahead and delete these lines as well, or I'll leave this one up. But what we'll do is I'll use this yellow line, make it blue, and this blue line is going to be my risk, and I'm going to move it as time goes on, because my risk should adjust as time goes on. Some people like to adjust their risk with a trailing stop. I like to manually adjust my risk after consolidation and breakdowns. That is something that I love to do, because then I have found that I'm able to adjust it, use key levels for my stops as well as for my profit targets, and adjusting my stops along the way. So with that being said, when I first get in the trade and it starts to break down, I take a small profit, take a little more. And then when we break this level is when I want to start to adjust my stop. And the first adjustment is going to be this 139.40, because I want to make sure that if we break low a day and then we pop back up above 139.40, there's a slim chance to me that we're going to hold below these lows and we're going to really break down to my price target. But in this case, it did continue downwards. And so when we zoom out, let's go ahead and go a little further. You'll see that we started to consolidate below this level. Now, during lunch hour, I don't want to just adjust my stop anymore like I used to. I used to adjust my stop in lunch hour just to protect my profits. And normally I would adjust my stop to this 139 level. But from experience, and shout out to Scott from V Traders, he mentions to me like during lunch hour, things can get a little whiplashy. There's low volume, people are out, so the stock can get kind of just run up. I want to keep it a little wide. So I kept it at 139.40. But once I come back after lunch around the 1330 area and it cracks, I am now risking this area right here. And the reason I'm risking that is because now we've consolidated nicely right at this area, and then we crack this level. So that's telling me that after consolidation, we shouldn't break, because if we break above here, we are now creating a higher high. So if that happens, that means the trend may be reversing. Doesn't mean it's going to, but it means to me I need to cover. In this case, I take a little bit more profits. And again, I'm holding the majority of my shares for the 136. Let me zoom back out. I want this 136 area. You can see after hours, we did get to the 137s. That happens. I don't like to hold after hours. But during the trade, we never got there. You know, I covered a small piece, and then at this point near the close, when things start to hover above a new area of support, which this actually ended up doing, at that point, I'm adjusting my risk to protect profits, and I just adjusted to this area. As you can see, I stopped out 138.40, so I made $1 a share on Amazon. It's nothing to run home about, but I'm very happy at how I managed to trade when I was in it. I was very calm, collected, and I wanted to make sure that I held for the price target. I was looking for 3-to-1. 4-to-1, I ended up making 1-to-1 on this, and that happens, and I don't want to beat myself up for that. Just part of trading. Now at the same time, how could I have done better? Well, as I mentioned, if we zoom in here and at the open, when we have this triple top and these wicks here, that's a great sign for me to go full size, risking off of this high on this breakdown, because that would have been $1 risk right off the bat with full size, and it immediately dropped. What was this? Almost $1.30. So it would have been a 1-to-1 right away. Could have recycled on this pop where I entered my first position, and then on this drop further down, when we come down here 137, you're up $2 a share from your core, and this would have been at least a 2-to-1, maybe even 3-to-1 if I were to recycled. That's how I could have done this trade better. There's always ways to improve, and that's something I'm constantly working on, because I'm not the best trader in the world, and I still get emotional, and I still am constantly working on that. But I do want to share with you how I spot this trade, because I think it's easy to spot, easy to identify. Is it easy to trade? No, because that's up here. It's in your head. So work on your mindset, and I wish you the best and good luck.